Welcome to our channel. Today, we're diving into an essential topic: investing for women and how to navigate inflation challenges. You work hard for your money, and it's time to make your money work hard for you, especially during times of economic uncertainty. We're going to explore smart investment strategies that can help you stay ahead of inflation and build long-term wealth. Let's get started. Let's talk about index funds, my friend. They are like the all-stars of the investment world. Investing in a diversified index fund means buying a piece of hundreds of companies. This spreads your risk. It's like having an investment safety net. Index funds are for long-term growth, not quick riches. They're incredibly low cost. Low fees mean higher returns. They're the bedrock of a strong portfolio. Take control of your finances with index funds. Let's talk about gold, shall we? Gold, my friend, has been a store of value for centuries. It's like the ultimate safe haven asset. When inflation rears its ugly head and the value of paper money dwindles, gold has a way of holding its own. It's like that trusty friend who's always there for you, no matter what. Now, I'm not suggesting you go out and buy a vault full of gold bars. You can easily invest in gold through ETFs or exchange-traded funds which track the price of gold. Think of ETFs like a basket of gold that you can buy and sell just like you would with stocks. It's a convenient and liquid way to add some sparkle to your portfolio. But remember, gold is a long-term investment. It can be volatile in the short term, but over the long haul, it tends to hold its value and even appreciate, especially during times of economic uncertainty. So if you're looking for a way to hedge against inflation and protect your hard-earned money, consider adding a touch of gold to your investment mix. It's like a little insurance policy for your portfolio. Let's discuss real estate. They say land is the one thing they're not making any more of, and that's why real estate can be such a powerful investment. Real estate is expensive. I can't afford to buy a house right now. And you know what? You're right. But you don't have to buy a whole house to invest in real estate. You can start small with REITs, or real estate investment trusts. They allow you to invest in a diversified portfolio of income-producing properties. And the best part is, you can start investing with a relatively small amount of money. Real estate tends to perform well during periods of inflation. It's like having your money work for you 24/7, even while you sleep. Over the long term, real estate has proven to be a solid investment. Stocks, riding the wave of corporate growth. Now let's talk about stocks, shall we? I know, the stock market can seem like a scary place full of ups and downs that would make even the bravest roller coaster enthusiast a little queasy. But here's the thing. Over the long term, stocks have consistently outpaced inflation. They're like that energetic friend who's always dragging you on adventures, even when you're feeling a little hesitant. But here's the key, my friend. You need to be selective. Don't just go throwing your money at any stock that catches your eye. Look for well-established companies with a proven track record of growth and profitability. Think of it like choosing a life partner. You want someone who's in it for the long haul, someone who's going to be there for you through thick and thin. Investing in individual stocks requires research and a bit of a learning curve. But remember, knowledge is power. There are tons of resources available to help you make informed investment decisions. You can read books, listen to podcasts, or take online courses. Chapter 5. Commodities. Investing in the essentials. Let's talk about commodities. Commodities are the raw materials of the global economy. We're talking about things like oil, natural gas, agricultural products like corn and soybeans, and precious metals like gold and silver. These are the essential building blocks of everything around us, from the food we eat to the cars we drive. Now, commodity prices can be volatile in the short term, but over the long haul, they tend to rise during periods of inflation. Why? Because as the cost of producing and transporting these essential goods increases, so do their prices. It's like that old saying, supply and demand. Now, you can invest in commodities in a variety of ways. You can buy physical commodities like gold bars or barrels of oil, but that can be impractical and expensive to store. A more convenient way to invest in commodities is through ETFs, or exchange-traded funds. ETFs track the price of a particular commodity or basket of commodities, making it easy for you to diversify your portfolio and potentially profit from rising commodity prices. Chapter 6. Tips. Tying your investments to inflation. Let's talk about tips, my friend. And no, I'm not talking about investment advice whispered in your ear at a cocktail party. TIPS stands for Treasury Inflation Protected Securities. These are bonds issued by the US government that are designed to protect your investments from the erosive effects of inflation. Think of TIPS as your inflation-fighting superheroes. Here's how they work. The principal value of a TIPS bond adjusts with inflation, as measured by the Consumer Price Index, or CPI. So, if inflation rises, the principal value of your TIPS bond goes up, and when inflation falls, the principal value adjusts accordingly. And here's the best part, you get paid interest twice a year based on that adjusted principal amount. It's like getting a raise every time inflation rears its ugly head. Now, TIPS might not offer the highest returns compared to some other investments, but they provide something truly invaluable: peace of mind. They're like a security blanket for your portfolio, ensuring that your investments keep pace with inflation and your purchasing power is protected over time. Chapter 7. Dividend-paying stocks. Earning while you invest. Now let's talk about dividend-paying stocks, shall we? These are like the gift that keeps on giving. When you invest in a dividend-paying stock, you're buying a piece of a company that shares its profits with its shareholders. It's like being part of a big, happy family where everyone gets a slice of the pie. Now, not all companies pay dividends. Some companies reinvest all their profits back into the business to fuel growth, and that's fine. But other companies share a portion of their earnings with their investors on a regular basis, typically quarterly. These dividends are like little bonus checks that can help boost your investment returns and potentially outpace inflation. And here's the thing. When you invest in dividend-paying stocks, you're not just relying on stock price appreciation to grow your wealth. You're also generating a steady stream of passive income. It's like having your money work for you, even when you're not actively trading. Chapter 8. High-yield bonds, balancing risk and reward. Now let's talk about high-yield bonds, shall we? These bonds are like the spicy food of the investment world. They offer the potential for higher returns, but they also come with a little more risk. So before you go gobbling them up, it's important to understand what you're getting yourself into. High-yield bonds are issued by companies that have lower credit ratings than their more financially stable counterparts. These companies might be newer, have more debt, or operate in riskier industries. Because of this higher risk, investors demand a higher interest rate, or yield, to compensate them for the added uncertainty. Now, high-yield bonds can be a valuable addition to a diversified portfolio, especially during periods of inflation. Why? Because their higher yields can help offset the erosion of purchasing power caused by rising prices. It's like having a financial cushion to soften the blow of inflation. Chapter 9. REITs, Investing in Real Estate with Ease. Let's talk about REITs, or Real Estate Investment Trusts. REITs are like mutual funds for real estate, pooling money to buy income-producing properties. They must distribute at least 90% of their taxable income as dividends. It's like getting rental income without property management headaches. REITs can diversify your portfolio and offer exposure to real estate. They provide potential for capital appreciation and steady dividends. Chapter 10. Long-term perspective, the key to outpacing inflation. Now, throughout this video, we've talked about various investment strategies to help you navigate inflation challenges. But there's one crucial ingredient that's essential for success in any investment endeavor: a long-term perspective. Investing is not about getting rich quick. It's about building wealth gradually over time, riding out the inevitable ups and downs of the market, and staying focused on your long-term financial goals. It's like planting a tree. You wouldn't expect to see a mighty oak sprout up overnight. It takes time, patience, and consistent nurturing for your investments to grow and flourish. Inflation, my friend, is a long-term game. It's the steady drip, drip, drip that can erode the value of your hard-earned money over time. But here's the good news. The power of compounding works in your favor when you invest for the long haul. Compounding is like the snowball effect of investing. As you earn returns on your investments, those returns are reinvested, and you start earning returns on your returns. It's a beautiful cycle of growth that can help you outpace inflation and build lasting wealth. I'm sure you've heard the news. Secure your financial future. Thank you for watching. We are not financial advisors. Always conduct your own research before making any financial decisions. If you found this video helpful, please like, share, and subscribe for more insightful content. Remember, smart investing is key to securing your financial future. It's not about being a Wall Street whiz or timing the market perfectly. It's about making informed decisions, staying disciplined, and taking control of your financial destiny. Please leave a comment if there are any topics you would like me to cover in future videos on financial literacy and investing. See you next time.